The IPO of Bajaj Housing Finance has left both sweet and sour memories for investors. Sweet memories for those who got the allotment as the stock more than doubled on listing. As against the issue price of 70 rupees per share, the stock listed at 150 rupees, hit the upper circuit and closed at 165. The next day also it hit the upper circuit and closed at 181. So, by extension, sour memories for those who could not get an allotment and hence missed their initial 160% gain. Now, such investors probably didn't buy the stock even after listing, as it had already run up a lot. Now, Bajaj Housing Finance has released its first quarterly earnings since listing. The market and stock euphoria have also cooled off. So, can one buy Bajaj Housing Finance stock now? Or if you had bought Bajaj Housing Finance pre or post listing and are still holding it, should you continue to do so? We will try to find out answer in this video. Hello and welcome to ET Money's YouTube channel. Today we will analyze Bajaj Housing Finance after its September 16th listing. We had analyzed Bajaj Housing's IPO as well. The link to that video is in the description, so do watch it to get the complete picture. By the way, did you know that you can get all financial data on Bajaj Housing Finance and any other listed company on ET Money through our newly launched stock discovery feature? You just need to type the company name in the search bar and hit enter. Do give it a try. Okay, let's begin by quickly checking Bajaj Housing Finance's stock movement since its listing. The Bajaj Housing IPO was subscribed over 67 times. Overall, as against the IPO size of 6,560 crores, bids worth around 3.24 lakh crore were received. The IPO received over 89 lakh applications, the highest number ever at that time. This record has been broken by Waaree Energies, whose IPO has received over 97 lakh applications. Now, the Bajaj Housing stock listed at a premium of 114% to its issue price. It hit the upper circuit on the listing day and the next day. That's when it also closed at its highest too at 182 rupees. After that, it started to cool off and correct. It fell to its lowest level of 136 on 7th October and is currently hovering around that. Now, as of October 23, 2024, it's down about 9% from its listing price. From its highest point, it has corrected by over 25%. Okay. Let's now examine Bajaj Housing's latest quarter performance. For ease of comprehension, we have divided it into three parts: portfolio metrics, profitability metrics, and asset quality metrics. Let's start with the portfolio metrics. The first metric here is assets under management. In Q2, Bajaj Housing's AUM crossed 1 lakh crore for the first time. On a year-on-year basis, that's a change of 26%. At the same time, the company's loan assets or assets receivable grew by 27% to about 90,000 crores. Now, if you are wondering about the difference between the two, well, AUM or assets under management is the market value of the assets a company manages on behalf of its clients. Loan assets or assets receivable are the company's actual loan book. Next, let's check the portfolio composition. The major share of the company's portfolio is home loans, though it has fallen year on year by 120 basis points. So has the share of the loan against property. On the other hand, the share of lease rental discounting and developer financing has inched up. Now, lease renting discount is a loan offered on rent generating properties. As long as loan disbursement is concerned, it has fallen year on year by about 140 crores. So, overall, while the rise in AUM and loan book is good, the fall in disbursements has been concerning. Next, let's look at the company's profitability metrics. The first one is interest income. For finance companies, it's the chief income component and it is similar to operating revenues in non-finance companies. Now, the interest income has grown 25% year on year from about 1800 crores to about 2200 crores. The net interest income or NII grew by 13% from 632 crores to 713 crores. The NII is obtained after deducting interest expenses from the interest income. Now, interest expense is the interest the finance company pays on its borrowings. Since Bajaj Housing is a non-deposit taking NBFC, it raises funds from banks, money market, and the National Housing Bank. The next metric is profit after tax. The company's profit grew to 546 crores from 451 crore, a jump of 21%. Next comes net interest margin or NIM. NIM is like operating margin for finance companies and is hence an important metric to track. The company's NIM contracted by 30 basis points year on year, and that's the reason for the large difference between interest income growth, which was about 25%, and NII growth, which was much lower at 13% year on year. However, the margin was higher than that in the last two quarters by 30 and 20 basis points respectively. Now, one culprit for the year-on-year contraction in NIMs is a higher cost of funds, which jumped 28 basis points year on year. The third and the last number we will discuss is return on equity or ROE. ROE is a crucial profitability metric as well. It tells us what returns a company made on the net worth or shareholders' funds. The company's ROE also fell from over 16% to 13% year on year. So overall, while the rise in the interest income is positive, the proportional increase in NII is missing due to the contraction in margins. The ROE has also fallen too, possibly due to the expansion in the equity base post the IPO. Next, let's check the asset quality metrics. Bajaj Housing Finance's greatest strength has been its asset quality, which is among the best in the industry. Now, gross NPAs are at 0.29%, a slight jump from 0.24% a year ago. The NPAs post-provisioning are called net NPAs, and these have increased from 0.09% to 0.12%. In Q2, the company registered loan losses and provisions of 5 crores, which is much less than the 18 crore a year ago. Overall, there is a slight deterioration in asset quality metrics, but given the industry figures, these continue to be among the best. Now, in the IPO analysis of Bajaj Housing, we compared the company with three of its peers, LIC Housing, PNB Housing and Canfin Homes. At the time we did this analysis, LIC Housing Finance had yet to declare its second quarter results, but PNB Housing Finance and Canfin Homes have declared their results. So let's compare some critical metrics of Bajaj Housing with those of PNB Housing and Canfin Homes to put the former's numbers in perspective. On your screen is the comparison of key financials of Bajaj Housing Finance, PNB Housing Finance and Canfin Homes for the second quarter. In terms of loan book, interest income and NII growth, Bajaj Housing is ahead of its peer by a wide margin. However, in terms of PAT growth, it is trailing behind them. Both its competitors' NIMs have expanded slightly year on year, as have their ROEs. Not so with Bajaj Finance, whose NIMs and ROE have contracted. Now, PNB Housing's NPAs have gone down by 54 basis points. However, in absolute terms, PNB Housing's NPAs are much higher at 1.24% than Bajaj Housing's 0.29%. Overall, Bajaj Housing Finance results are mixed when compared with those of its peers. Next, let's take a look at the valuations of Bajaj Housing Finance now post its listing. Now, at the time of its IPO, Bajaj Housing was more expensive than its peer by a wide margin. Its valuations have settled as the stock has fallen since. From the peak of 8.5 on September 17, 2024, the PB has fallen to 5.8 on October 24, 2024. Despite this, the stock is even more expensive than its peer than it was at the time of its IPO. So as an investor, should you buy Bajaj Housing Finance post its quarter 2 results? Let's try to answer this question and conclude the video. As mentioned in the IPO video, rapid growth, good asset quality, and the backing of the Bajaj Group are the key strengths of Bajaj Housing Finance. The main challenge is high competition, not just from the peers discussed in the video, but also from other housing finance companies, NBFCs, and banks. The company's first quarterly results since listing are a mixed bag. While the company remains on the growth path, it will need to arrest the fall in its NIMs and restore them to their previous glory. It also needs to improve its disbursements. The stock has corrected since listing and the valuations have cooled off, but as compared to its peers, they continue to be very high. This can keep the stock price in check for the foreseeable future. So given all this, what do you think about this stock? Is it a buy or a hold or a sell? Do let us know in the comment section. And with this, we have come to the end of this video. I hope you found this video useful, and if you did, please don't forget to share it with your friends and family. I'll be back soon with another video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.